Hey, what's going on, everyone? Vega here for Serpent X Tech. Welcome back to another episode of Caffeine and Crypto. Everybody should be on their Christmas break, but in case you watch this in the future, just want to go ahead and record one because we are not doing a show next week. So Caffeine and Crypto, we talk about crypto, obviously. Crypto news for this past week, chilling out. Some shenanigans towards the end of the stream. But as you can see, Bitcoin's still sitting below 88K. Ethereum still below 3. BNB below 9. A lot of the altcoins are meh. Bitcoin is meh. We had some record outflows for ETFs, at least Bitcoin ETFs. And it's the holiday season. So I'm not sure if a lot of people care. Maybe the spot market doesn't really care, but I know people are... Honestly, it feels like people are using too much leverage. That's what it feels like. It feels like people are using too much leverage. But basically, since November 22nd, we've been just ranging, bro. Ranging. You know, anywhere between 94 to 88K seems to be a good range to play. Maybe even like 85, 86. And right now, we're just sitting at that 87. This past week, pretty tight. You know, from Monday to Monday or Sunday. So let's see here. Yeah, so Monday high was 90. We started to push up, fell back down, bottomed out at least on the weekly at 86, and now we're at 87. You can see we're just getting tighter, right? So we're getting tighter and tighter as we lead into January coming up here in a few days. And we'll see how 2026 is going to turn out. But on Binance, Bitcoin ETFs lose 825 million in 5 days as US becomes the largest BTC seller. So the ETFs lost quite a bit and went on a losing streak this Christmas holiday. US investors emerging as the largest of the net sellers of Bitcoin amid tax-driven selling and derivatives expire pressure. And we talked about the expiration coming up. And yeah, so a lot of people are doing, you know, what is it? Tax loss harvesting, maybe reallocating assets from one to another, whatever it might be. Data shows that institutional outflows remain heavy, even as analysts argued the move is seasonal rather than structural, keeping hopes alive for post-holiday rebound, which, you know, typically, again, October, November, December, January, February, we have a good stretch there. We have a little dip during the Christmas holiday, and then we rebound and we climb back up January, February. But then at the end of February, going into March, we start to fall. April, we start to recover at the tail end of April because of taxes coming in or tax returns coming into the people. But it's a different environment overall. And I wonder if January 2026 is going to see a slump. But according to data from Farsight Investors, the U.S. spot Bitcoin ETFs recorded 175.3 million in net outflows on Christmas Eve alone, despite the shortened U.S. trading season or session. That marked the fifth consecutive losing session, bringing a total ETF outflows over the past 5 days to 825 since December 15th. Only one trading day, December 17th, posted live positive flows into the ETFs, recording about 457 million in net inflows. Every other session has closed in the red, and you can see a chart here of the days. So at the top here, we got the respective ETFs, the dates on the left-hand side, and then you can see the average, max, and min at the bottom. So pretty much last 5 days of outflows, and the only positive seemed to have been on the 17th of December. U.S. investors are leading the selling pressure to sustain ETF selling has coincided with persistent weakness during U.S. trading hours, reinforcing the narrative that American institutions are currently driving the sell side. This trend is visible in Coinbase Premium Index, which measures the price difference between Bitcoin USD on Coinbase and Bitcoin USDT on Binance. The index has remained negative for most of December, signaling weaker demand from U.S.-based investors. We've got a quote here. It says, U.S. is now the biggest seller of Bitcoin. Asia is now the biggest buyer. From Ted Pillows. Tax loss harvesting and options expiry to blame, right? We all know about tax loss harvesting. A few of my colleagues talked about it. Well, not all of them, but a couple of them. Market participants largely attribute the ETF drawdown to year-end tax loss harvesting and the impact of major quarterly options expiry. Most of the selling is due to tax loss harvesting, which means it'll be over in a week, says trader Alec. on X with this another post here from on X 9 days ago at 90K level. Coinbase premium became fully negative and has been persistent since then. Also, price can't break the 90K level, keeps rejecting from there. I think once it's reclaimed with premium turning positive, you go long and don't fade the rally. So we'll see, right? So next week again, we won't have a caffeine and crypto. Good morning, automatic beats, but we'll see how January turns out. As we talked about in many of the past episodes, people are just chilling. So we'll see how things go. And for any of my future viewers, comment what your thoughts are. Are you just chilling out? Are you still dollar cost averaging, buying what you can? Let me know. But yeah, weekend flows is basically what it boils down to. From Glassnode, from a number of different trading desks, whatever it might be. Same thing on this article, just record outflows. Bitcoin struggling to climb back up to 90K. Yada, yada, yada. End of the year. Task loss harvesting. People reallocating, readjusting, whatever it might be. Got another chart here. You can see on the 24th, daily total net inflow, negative 175. So that's really outflows. On the 23rd, 188. 22nd, 142 mil. 19th, 158. And 18th, 161. With December 7th only showing 457 in. Fidelity ETF, the FBTC dominated December 26 outflows at 74.38 million, accounting for 89% of total redemptions. Grayscale Legacy GBTC fund posted 8.89 million in withdrawals. Ethereum's ETFs as well, mirroring Bitcoin's weakness. The spot ETFs also faced selling pressure, recording 52.7 million in outflows on December 24th. The withdrawal followed 95.53 million in redemptions on the 23rd. The 22nd of December provided temporary relief of 84.59 million in Ethereum ETF inflows before outflows resumed. The net assets for Ethereum products stood at 17.86 billion on December 24th, down from 20.31 billion on December 11th. Cumulative total net inflow across Ethereum ETFs held at 12.38. So people are just doing what they normally do every single year. This is normal behavior. It's just the market is in a different position at the time that this is all happening. And what normally happens, like traditional trends, as we talked about in the past, you know, from October, November, December, normally being a green situation, with this happening at the end of December, we're just not at those levels. So it seems a little bit more, but I mean, we haven't fallen drastically. I mean, we've been sitting around this area since November, the end of November. Yeah, we fell from the previous all-time high, you know, in the early October, but we just haven't really moved very far on this one. And you can see that we're bouncing off of it on the daily. We're bouncing off of this EMA 20, right? This red line right here. We're just bouncing off of it. We hit it, well, we were above it in the early parts of December, fell below it, and we touched it 1, 2, 3, 4, 5, 6 times. And usually when you keep hitting a wall like that, there's a chance that we might pull back even further. If we did pull back even further, where would we fall? Well, let's do some speculation. This is just pure speculation on my part. Actually, before I do that, let me zoom out some more. So let's see here. If we fell from where we are right now, looks like we got some significant support around this 76, 75 range, 74, right? Definitely between 74 and 76. We got some, what should be support now, as in the past it was resistance. Again at that 72K range. 69, 68 seems the next one after that. And that's only a 21% drawdown. To fall down to $68,000 Bitcoin, 21% drawdown. In the past, these 30% drawdowns were normal. I don't think it'll be normal right now. But a black swan event can certainly push us down. I mean, at the worst, historically, you know, a $45,000 Bitcoin is like going to be like, oh my God, we're way back to where we started. Because you can see there's some serious support at that 48K range going back in time here. So we'll see. But that's a significant drawdown. We'll see how things turn out. But either way, I know, like, me and my household and my mom and family and stuff, like, we're going to continually dollar cost average when we can, you know. Can't always do it, but when we can do it, we definitely accumulate. Still solo mining Bitcoin for that one rare chance. Still trying to, you know, accumulate what I can. But yeah. Metals are doing pretty good. Major cryptocurrencies and crypto stocks slid early U.S. trade Friday, with Bitcoin slipping below 87K and Bitcoin miners down 5% or more across the board. Gold and silver and other metals surged, with geopolitical concerns adding to the debasement trade. We still got shit going on across the world, so people are kind of concerned. What's up, Crypto Pounders? Hope you're all right. Hope you guys had a Merry Christmas. We'll talk more randomness towards the end. I'm just blowing through the news real quick. Probably won't do the full show until 12. We'll see. I'm going to go spend some time with my sister and fam, and won't do a show next week. But bear with me, and we'll be back to normal the following week in January. Anyways, it's in what become all too familiar action at the start of the U.S. trading day. The crypto sector quickly more than gave up even the tiniest hint of overnight rally, nudging above 89K at one point. As the U.S. slept on Friday, Bitcoin quickly tumbled back to 87 as American stocks opened for trade the following Christmas Day. Again, all too familiar for crypto bulls. The poor price action occurred as metals continued to soar, with gold, silver, copper, and platinum all posting new record highs on Friday, already attracting capital that might otherwise go to Bitcoin as part of the global debasement trade. The metals today are also maybe benefiting from rising geopolitical tensions, with the U.S. Hitting the ISIS targets in Nigeria on Christmas Day, and adding pressure against Venezuela by blocking sanctioned oil tankers. Palladium and platinum led the metal surge, both up 10%, while silver and copper gained 5%. Gold is ahead 1.5% to 45.73 per ounce, so $4,573 per ounce. I remember when gold was like $1,000 per ounce, guys. That's should have got some of that. Actually, I think I did. I have to go and look. When I started diversifying a little bit more. Nasdaq, the S&P 500, DJIA were all trading nearly flat in the morning action. Bitcoin was lower by 1.6% over the past 24. Ethereum was down, similarly Doge, blah, blah, blah. They have all recovered since this article was written. But, yeah. The mining stocks, the crypto stocks, the ETFs, same shit, different day, guys. Same shit, different day. Now, the biggest thing for the miners is these larger operations, right, are suffering. They probably have the reserves and the capital to sustain their ride, to continue to mine Bitcoin, because they got substantial savings on the electric rate or on the property or on the overhead or whatever it is, right? Like, these bigger companies have the capital to sustain that, but the smaller companies, smaller mining operations might not be able to. So, really keeping an eye personally on how is, like, this chart's been taken away. Yeah, August 14th. But the Bitcoin hash rate. Yeah, they don't have it anymore. So we can go to, let's see, a mining pool stats. We'll have it. Bitcoin. It's only going to be 7 days. Yeah, there's some chop. There's some chop. and it's at 1.14 zettahash. Dropped down to 1.12, nothing too crazy. 1.15, 1.14. Here's a significant chop, and I think somebody hit a Bitcoin block on this day, December 22nd, 1.1 zettahash. Right now, it says we're around 110. So maybe some operations are closing down, and maybe you get lucky and hit a Bitcoin block. Who knows? Who knows? Who knows? But if you do, help a brother out. If not, good luck. Godspeed. Don't tell anybody. Otherwise, keep hashing away, keep dollar cost averaging, keep jamming. Same, dude, it's just boring, right? And usually when Bitcoin is boring, that's usually when it will catch you off guard. I'm hoping for a nice surprise come January, February. That's what I'm hoping for. But again, that's hope. People don't like to trade off of hope. They want to trade off of data. And the data shows the market is pivoting. It's pivoting. You know, first it was AI, which stole a lot of market share or from Bitcoin and crypto, and now people are moving into rare metals because of the landscape, whether it's political, geopolitical, whatever. Like they're trying to protect themselves. No, it's not Sunday. It is Saturday. Bitcoin price set for the next move higher in 2026, says Swan Bitcoin CEO. Let's see what they say. We know Bitcoin's consolidating around 90K. Now, what is the rally going to? As Ethereum and Solana slide, growing institutional demand and fading 4-year cycles boost confidence that Bitcoin could hit new all-time highs above 125K in 2026. We know that blah major currencies, blah, 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 falling over 20%, 90 days, yada, yada, yada. However, Swan Bitcoin CEO Corey Klippstein believes that the recent downturn may already be behind the market and argues that Bitcoin is positioning itself for a strong rebound heading into 2026. He acknowledged that the recent volatility has emphasized that Bitcoin's broader market structure appears healthier than in previous cycles. Bitcoin's previously surged to around 73K before climbing as high as 126K, followed by a pullback that has seen prices stabilize in the high 80Ks. I got a quote here. For the past couple of weeks, Bitcoin has been bouncing between roughly 85 and 91K. He said, describing the current phase of consolidation rather than weakness. Zooming out, he argued that the traditional 4-year Bitcoin cycle may be losing relevance. Historically, Bitcoin peaked in 2013, 2017, 2021, followed by a prolonged bear markets where prices failed to reclaim previous highs the following year. This time it feels different, he explains. We didn't see any kind of astronomical price surge in 2025 that past having driven cycles, right? The Bitcoin halving would suggest. And because of that, it's hard to imagine a steep collapse from here. According to him, the lack of the overheated rally reduces the likelihood of a sharp drawdown. We know that institutional demand has strengthened Bitcoin, blah, blah, blah. Bitcoin tends to be one-way motion. People generally don't enter Bitcoin and exit completely. They usually stay and adjust how much they buy, right? Accumulating little bit by little bit. So we're not actually getting a price prediction. He's just saying he's optimistic that Bitcoin will reclaim. Despite recent declines across the broader crypto market, the outlook remains optimistic that Bitcoin is entering a more mature phase driven by long-term adoption rather than speculative cycles. With prices consolidating and institutional interest growing, the next major move for Bitcoin could be upward rather than another prolonged downturn. But I think a lot of people, we covered the past couple of articles, these past couple of weeks, the prolonged downturn is more concerned about what the world is going through, right? What was happening in the Japanese market, the yields for bonds, everybody's buying each other's debt, China, US, Japan, EU, UK, whatever. Everybody's got a big portion of each other's debt. So if one country, collapses or has a major hit, it's going to affect the entire world order. There's a lot of strings that are connected to each other, and sometimes if you cut or pluck those strings the wrong way, it can have a negative effect. The geopolitical situations throughout the world, all of those affect the markets. 10x Research outlines that key events that could move crypto in 2026. So Q1, tight money, policy pressure. That's the first one they say. Q2, leadership change and network upgrades. And we're talking about leadership change with like Jerome Powell will reach the end of his second term in the Federal Reserve chair on May 15, 2026. I think we already got some friendly people in place for the CFTC and others. So we'll see how that goes. But while the U.S. has become more friendlier towards crypto, there's still some things that need to get finalized and outlined and stuff like that. The European Union rules will require exchanges to report detailed crypto transaction to tax authorities. This could add short-term pressure, but also more clarity to the industry. That's under Q1. Q3, MiCA rules that take effect, volatility rises, right? Or MiCA rules by July 1st, 2026, given clear laws for digital assets during the period the U.S. budget problems and shutdown risk may return. In the past, similar issues caused government shutdown that lasted about 40 days, which hurt market confidence. So we could avoid that. That'd be great. Rud Puts, a member of the channel for over 34 months. By the way, if you ever want to join the channel, it's down below. We'll get back to some regularly scheduled content in the future. We'd love to test out some new miners as some of the vendors communicate. I'll get on some emails over the next week. Try to get things going. But appreciate you stopping by, Rud. Q4, elections volatility, Mt. Gox repayment. So Mt. Gox, if you don't know, was an old platform. It was a Magic the Gathering platform that allowed people to trade the Magic the Gathering cards and stuff like that. Somebody bought it. Some young man bought it, turned it into a trading desk for crypto and Bitcoin specifically, primarily based out of Japan. Lost the money, got hacked, lost the money, and had to declare bankruptcy. And, it's been a long time coming. But those people who have those accounts have been fighting to get their money back, and there should be some repayments going out in 2026. Late in the year, the crypto space faces the final Mt. Gox creditor repayment. Some of them already have it, but this is the final creditor repayments now scheduled for 2026. Mt. Gox still holds around 334,689 BTC, worth close to, it says 4 USD. I don't think that's right. Billion. I think it should be more than that, which could affect Bitcoin's prices distributions finish. So like all these people who were in Bitcoin mad early, guys, like I mean mad early, they're probably going to get these funds and want to cash out. Like that put a bad taste in their mouth. They don't want nothing to do with Bitcoin. They're good on that. Y'all can have it. And they probably put in a few 10,000s, maybe 100,000, and now they're millionaires, right? Basically. So they're going to sell. That's going to add more supply, right? Because we know institutions have been buying or out buying the amount of Bitcoin mined. So we'll see how things go. But it's good to see that those people are getting their money back. So we might have to have some of that sell pressure towards the end of 2026. Markets will also be about 15 months away from the next Bitcoin halving, a phase that often marks as major cycle changes rather than immediate price rallies. And remember, we rallied last time before the halving, right? And I wasn't expecting that. I was expecting a rally after, a few months after the halving, but we rallied before the halving. So that could be a kind of buy the rumor, sell the news. How much does it go? We'll see. But yeah, 15 months away. We're not too far whatsoever. Tom Lee's predictions: $9,000 Ethereum, $200,000 Bitcoin in 2026. Now that's down. That's down because they were all like $1 million Bitcoin. Blah. 20K Ethereum long term. I mean, that still ain't gonna be much, bro. Because most of us already got rid of our Ethereum, so we'll see how that turns out. We shall see how that turns out. What is this? 1 minute? Let's take a listen real quick.
For crypto is still really good for the next 5 to 10 years. I don't want to overuse the word super cycle, but we know that Wall Street wants to tokenize everything, whether that's Vlad at Robinhood or Larry Fink at BlackRock, and that's going to bring a lot of efficiencies to Wall Street, but it really brings the use case forward for something like Ethereum. So we're pretty bullish. I think Ethereum, which is around 3,000, can easily get to 9,000, 7,000 in early 2026. And then over time, as it starts to be competitive with payment rails, could get to the 20,000 level. So I'm pretty bullish. I like Bitcoin. I think Bitcoin is suffering from gold envy right now.
Yes.
And that liquidation event, gold's been a great asset, now at over 30 trillion. But I think, again, Bitcoin is a genuine store of value. It is supply limited. So I think in next year is really when Bitcoin can sort of begin to recover, and the 200,000 level makes a lot of sense to me.
I want to run through some of your picks and.
Yeah, I want to run through what he picked before and what he was saying beforehand. We'll see. And again, a lot of the miners, most of you that are watching, we liquidated our Ethereum the moment they betrayed us. Well, they didn't betray us. They told us they were going to switch over a long time ago, so it's not really betrayal. But yeah, like I might have like a small bag of Ethereum. So even if Ethereum did hit $20,000, like I got $1,000. Yay! Like, but it is the biggest DApp market. It is one of the bigger networks out there. We'll see if it gets mass adoption, so on and so forth. But yeah, had to sell some of it to get out of the debt hole with the electric company, to freaking get the car running, take care of business, help out the fam. Like it sucks, but gotta do what you gotta do. Unlike some of the true OGs out there, the Satoshi era OGs, who probably are millionaires, I'm not. So I'm working my ass off to try to make ends meet, keep my family going, keep a roof over our head. While others, and like the Mt. Gox people, are going to be comfortable, and congratulations to them, because they suffered a long time for being one of the first people in the door. And that's the hard part with new technologies or new anything, is that if you're one of the first buyers, one of the first investors, one of the first contributors, you often get burned. But if that asset or platform or project is able to sustain long term, you'll reap the rewards. It's just you got to suffer through all the bull crap at the very beginning. MicroStrategy, we talked about this over the past couple of episodes. MicroStrategy says they got 21 months that they can pay dividends to their people, and that they're fine. They raised the capital, blah, blah, blah. They shouldn't have to sell their Bitcoin in order to protect themselves. Because if they did have to sell their Bitcoin, that's going to be a huge collapse, right? That's a lot of Bitcoin that they have to sell. They hold over 671,000 Bitcoin, funded by $15 billion in debt and stock dilution, making it a highly leveraged Bitcoin bet. Its stock trades below the value of Bitcoin holdings, reflecting rising market fears around sustainability, liquidity, and dilution. A major Bitcoin downturn could force liquidation or default, potentially triggering a larger market shock than the 2022 FTX collapse. So a lot of people are saying, like, Michael Saylor, you need to come up with a better platform, a better solution. You need to diversify. You need to figure it out, because if you put all your eggs in one basket, which it is, it's in the Bitcoin basket, they're concerned, a black swan could happen. If this all falls apart, it could be larger than the 2022 FTX collapse. Here's why that threat's real and what could trigger it. The company spent over $50 billion buying Bitcoin, mostly using debt and stock sales. Its software business brings in around $460 million a year, which is a fraction of its exposure. As of December 25, its stock trades well below the value of Bitcoin holdings. The market value is approximately $45 billion, but its BTC is worth around $59 to $60 billion. Investors are discounting its asset because of the concerns about dilution, debt, and sustainability. Its average BTC cost basis is around $74,000 now, right? We're at $88,000 now, and its average cost, because it depends on when they bought over time, is around 74. So if Bitcoin falls below 74, that's bad news bears. More than 95% of its valuation hinges on the price of Bitcoin. If BTC drops sharply, the company could be trapped, holding billions in debts and preferred equity with no way out. For instance, Bitcoin dropped 20% since October 10th, but MicroStrategy loss has been more than double in the same period. So they're taking an extra hit there. MicroStrategy used aggressive tactics to fund its Bitcoin buys. It now owes over 8.2 billion in convertible debt and has more than 7.5 billion in preferred stock. The financial tools require large cash outflows, 779 million annually in interest and dividends, which again they say they raised. At the current levels, if Bitcoin crashes below 13,000, MicroStrategy could be insolvent. It is likely in the near term, but BTC's history shows that 70-80% drawdowns are common. Now, Bitcoin falling to 13K from where we are is drastic. I don't think that would happen. There's too much support in between. But let's just say for S&Gs here, a $13,000 Bitcoin would be an 84% drawdown from where we are right now. Again, don't think that's possible, but MicroStrategy, they're right to be concerned about what Michael Saylor's trying to do, but we'll see how things go. A black swan event, a number of economic decisions or indecisions, geopolitical tensions continue to rise, and Michael Saylor and MicroStrategy could be in trouble. We'll see though. Gold and silver bulls taunt Bitcoin investors amid parabolic rally. Of course they did. Fiddler asks, SerpentX Tech, you think Trade Ogre will ever have a repayment? Asking for a refund. Asking a friend. For a refund as well, apparently. Fiddler, I don't think they will. If you check out our channel, and you check out Mine Something, we talked about Trade Ogre. We talked about Trade Ogre. We talked about what we found about Trade Ogre. And we raised some concerns. They were the exchange that these lesser mineable altcoins would go to in order to get listed. But Trade Ogre was very, at the beginning, silly to just accept everyone. All these shit coins that just got created and put on there, traded for a few days and then disappeared. Or traded for a few months to a year and then disappeared. I can't remember the owner's name that we found. We did find him. But I don't think we're ever going to get paid by Trade Ogre. So people that lost Caspa, that was a big stupid situation where everybody's Caspa was locked up and they couldn't withdraw. People were trying to take advantage because the price of Caspa on Trade Ogre versus the other markets was much lower. So they were trying to buy low on Trade Ogre and then withdraw and then sell higher on a different exchange. And they got bit because Trade Ogre locked that shit down. But Trade Ogre has done some shady stuff in the past. So unfortunately, no, I do not. Trade Ogre was largely an anonymous crypto exchange that was recently dismantled by the Royal Canadian Mounted Police in a major operation resulting in the seizure of 40 to 56 million in digital assets due to the role in facilitating illicit finance, including money laundering. By lacking proper registration and know your customer, the shutdown initially by a tip by Europol represents Canada's largest crypto seizure, and first-time crypto exchange platform was shut down by Canadian law enforcement targeting its operations as an unregistered money service business. Now, why did they get a tip from Europol? Because the owner or the people that we found connected to Trade Ogre lived in the EU. They were doing business out of Canada, but they lived in the EU, and they were trying to avoid the US because of the US regulations, stuff like that. When they locked up they screwed over people with other altcoin projects, right? Like the money was just gone because the project either failed or Trade Ogre didn't find it feasible to maintain a trading platform for that asset because it went to crap anyways. The Caspa situation, you pissed off people, you locked up their funds. So yeah, people were going to report you to the proper authorities depending on where they live. So you get enough people that are screaming, yo, Trade Ogre's clowning us. Yeah, of course. Of course you're going to get in trouble. Now, what Trade Ogre told me with the Caspa situation is that people were blackmailing them, basically. Right? That's what I was told. Matter of fact, let me pull it up here and let's talk about it. I'm not afraid to talk about it. Let me pull it up in my chat here real quick on a different window before I show you guys. 1 second, please. 1 second, please. Because I try to get Trade Ogre to, like, hey, would you consider listing blah, 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 yada, yada, yada. Where the heck is all my... Yeah, so why are so many... Okay. Can you guys see this? All right. So, hello. You all right? Why are so many members of the crypto community reporting issue with withdrawing Caspa to me? It's a very toxic community. Okay, so what? The miners are toxic? It has become a bit more toxic than it was in the past. But several of them are currently trying to extort the exchange. And I know people were like, oh, hey, like Caspa's only, 10 cents here, but on other exchanges it's 25 cents. I'm trying to buy on Trade Ogre and then sell on here and blah, blah, blah. I understand that, but whatever. I did advise that, yeah, the crypto community has turned to trash. It's a bunch of fake scammers and thieves these days. The community has changed since the OG days, and Trade Ogre's been around for a hot minute. But what are you going to pay back Caspa, like the people from Caspa? Like, what's up? They had nothing to say to it. But what does this mean? Several of them were currently trying to extort the exchange. I don't think that was related to the people trying to buy Caspa for cheap on the side and then sell it for higher on the other. I think it was related to something else. And maybe they were dealing with some good, like big boy criminals. Maybe they were. And yeah, they were getting extorted or whatever. They were put in a tight position to where if they didn't do XYZ, I'll rat you out to the police. I'll rat you out to the FBI. I don't know. But I assume operating a crypto exchange can be very difficult, especially with all the rules and regulations you need to adhere to, and depending on the country that you're in. But I don't think, 40 to 56 million in digital assets. I hope you guys get your money. I just don't bet on it. Now, BlockFi. I remember BlockFi was having trouble, right? And I remember, like, I saw it on the news. BlockFi, blah, 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 gonna file for Chapter 111 bankruptcy, blah, blah, blah. Boom, on my phone, boom, 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 boom. Withdrew. I didn't have a lot on there, like a couple $100, nothing big. I know some of you had thousands. Some of my friends, colleagues had tens of thousands. I got my money out same day, so close, because guess what? A few hours after I got my couple hundred out, it was locked down. Everybody's funds was locked down. You couldn't get your money out. Now, you should have been able to submit a claim, go through the proper procedure, wait 50 years, eventually get your money out. But BlockFi was one I was able to escape from. The other one I wasn't able to escape from, and again, this is like a couple $100, guys. This isn't big money. It's Celsius. And Celsius Network. That one locked up before I could do anything. And it was just a chain of events. You got homeboy over promising about rates, right? 12% on your crypto, 10%, 20%. Anything with exorbitant rates that you're going to earn, 20% on your crypto if you just store it with us. That's bullshit. There's bullshit. Don't fall for that crap. These guys were all interlinked or intertwined in some form or fashion. And once those few dominoes started to fall, it was game over. Trading Ogre was just a small exchange that the lesser altcoins use to buy, sell, trade, whatever their assets, and gain exposure to the broader, altcoin market. And Trade Ogre would list you if there was enough open interest on it. If you were a lesser coin, then they wouldn't do it. That's why Waglela didn't move forward with getting listed on Trade Ogre, because one, they were doing shady stuff, the Caspa situation. We know they screwed over other projects in the past, and look what happened. So we shall see. We shall see. But do you have any exposure? Question to you guys. Do you have any exposure to gold, silver, any of the rare metals? Do you have any exposure, whether you're buying stocks or buying the rare metals yourself? I'm curious. Do you have any exposure? Very curious. All right, I'm going to get ready to rock and roll here. I don't think Red Panda's going live today. Let's listen to this 3-minute video about expect Bitcoin to hit an all-time high in 2026, says Swan Bitcoin CEO. We already talked about this article, but let's watch it and listen together.
Bitcoin CEO Corey Clipston. All right, Corey, so obviously you're exposed to Bitcoin. You want it to do well. You're not coming in as a neutral party. Make the bull case for Bitcoin and other cryptos right now.
Brian, you're the lucky charm for Bitcoin, and we're here to usher in a nice new rally in 2026. So yeah, it has been a rough fall right after a nice rise. Remember, we actually touched 73K before that rise up to 126, and now we're settling into kind of the high 80s. It's been bouncing between 85 and 90, maybe 91 for a couple of weeks now. I think the bigger story, if I zoom out, is these 4-year cycles that we got so used to in the Bitcoin space, where there was a bull market peak in 2013, 2017, 2021, followed by the price never actually reaching that level the following year. So there was never a time in 2014 where the price surpassed that high of 2013. Same thing for 18 versus 17, same thing for 22 versus 21 with the FTX collapse and all of that. And I think because we didn't see this astronomical price rise in 2025 that you might have expected if you still believed in those halving driven cycles or liquidity driven cycles or whatever it was that was causing that 4-year cycle, because there wasn't an astronomical rise, it's hard to imagine some precipitous fall from here. It seems like there's plenty of institutional money and government money on the bid and lots of people buying and more people coming in. Adoption in Bitcoin is kind of a one-way motion. People don't tend to get into Bitcoin and then get out of it. They generally stick. It's just a matter of how much they buy. And so I think we have more than a 50% chance, is how I handicap it, of a new all-time high in 2026. So I actually do expect that we'll see above 125K next year.
Above 125K. This might be a little bit off topic. And by the way, I love being a lucky charm. It's better than the grinders, the Ciphers of the world, TeraWolves, Hut 8s, whatever they are. They've gone more now to AI power. They're not leaving Bitcoin mining, but the focus has been elsewhere. Does that actually help or hurt the Bitcoin case if fewer huge industrial miners are going after that ledger?
Look, the Bitcoin mining space is always so dynamic, and there is a nice interplay between smaller scale miners and these larger institutional industrial scale miners. And yeah, you are absolutely right. There has been tremendous stock performance by the Bitcoin mining stocks that have leaned into AI over the last few years. And you see even some of the larger ones like Core Scientific, which came out of bankruptcy famously and has had a nice little run here. I think they've just come out and said that they're going to be 100% HPC by 2028 or 2029. So they want to get out of Bitcoin mining completely. All this does is just create more opportunity. And remember, just because hash rate might fall or go up.
All right, no need to continue on with that. You notice how he said, the small scale miners. There's still a lot of grassroots miners out there that are helping secure the network. Yeah, it's 1.14 zettahash, but while a large percentage of that is, the foundries or what have you, there's still a large multiple of the network that's diversified in the small miners, the at-home individuals, or the small scale, sheds, ranches, whatever, right? So Foundry is 28% of the net hash. AMP Pool 15%, via BTC 10%, and the rest are under 10%, if not lower, you know, you still have a majority that is the smaller miners or the hosting miners or whatever, right? It's diversified. So the hash rate doesn't need to climb up. I think the Bitcoin network is very secure. We do need to worry about BIPs or Bitcoin improvement proposals in the future to optimize and make it more resistant to quantum threats in the future. But we could sit right where we're at, around 1 zettahash, and be fine for the next couple of years. We need the price action to follow. Now, if the price action does follow and we have a $200,000 Bitcoin, now you're going to see more hash rate, right? So we'll see how things go. It's okay that some of these larger HUD 8s and Terra and all that stuff are moving to AI, because the network is secure. The network is there. It will be fine no matter what they do. So look forward to see how things go. Definitely want to see the price action move forward. Coinbase breach fallout spreads globally as arrests made in India. Fallout from the crypto's most high-profile security breaches has gone international. Coinbase chief executive officer or CEO Brian Armstrong said former customer service agents was arrested in India months after hijackers bribed support staff to gain access to sensitive customer information at the largest U.S. crypto-based crypto exchange. Now, I have been impacted by this, and I don't know if you guys have been either. So let me know in the future when you watch this video or not at the 11:48 a.m. mark. But calls or attempts to get into your accounts or emails that are associated with your crypto assets or what have you, right? That data has already been leaked. Your email, your phone number, your everything has already been put out there on the dark web, and it's just being sold from one person to another. And you're getting consistent calls, you're getting emails, you're getting text, you know, saying blah blah blah, your account's been breached or your account's dead. Do not fall for those. Be extra careful. Be vigilant and pay attention to what you're doing. Don't just click shit. Don't just tap on things. Pay attention, because that data breach is affecting more than just crypto consumers, but even the newer people, right? You got to educate your mom, your pop, your aunties, your uncles, your nephews, your nieces, everybody, right? Because they're trying to play smart. Some of the calls look like they're coming from legitimate sources. Some of the calls look like they're coming from Google or from Facebook or from Yahoo or from wherever. They're doing good to try to hide themselves. And then try to gain access to either the email or phone number associated with those accounts, or get access to those accounts in general. But yeah. And unfortunately, when you outsource your calling centers, when you outsource your customer support centers, this is what you're going to get. And I'm not going to name the company I work for, but it's apparent. And there's some security measures that the company needs to take internally in order to prevent that, because some of the frontline experts shouldn't be able to, or frontline customer support personnel shouldn't have access to such sensitive data. It should be, within, what do they call it? HIPAA, which that's more medical, or GDPR, whatever the regulations are for your various countries and states. But yeah. Either way, I'm looking forward to 2026. I'm hoping that when I come back to the regularly scheduled stuff, I'm gonna try. Some of the content's gonna be automotive. I know you guys want crypto, enjoying them. I appreciate the support that you guys generously provide, even though I haven't been really putting out content like that. So I'm really grateful for you guys, the community as a whole, and bearing with me. But I'm hoping that when I get back to the swing of things, that I can, that we see the market rebound. We're back over 100K, and we're climbing. We'll see how things go. No government shutdowns, no more geopolitical bullshit, no more wars, no more craziness. We'll see. But a nice, smooth, upward trend rally would be nice for those that maybe they're done with crypto, right? But there's new people that want to get involved. To let it move hands and let new people get involved, whether it's to help secure and this is the biggest thing for me, I just like participating in the network. Yeah, I can accumulate crypto, XYZ, blah, blah, blah. But I like participating, you know, running a node, mining, participating in a network, participating in the security of it, the transactions of it, which again, as miners, we can't see the individual that we're processing a block for, yada, yada, yada. So for the governments and countries to come after us and be like, hey, you need to provide transactional data, like we can't. Like we process the block and it goes to the blockchain, that's it. End of the discussion. We can't see the owner, blah, 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 all that stuff. So, but I do like participating in it. As long as they don't try to get too nuanced and restricting the mining networks, I think we'll be just fine. They said earlier in the video that they're trying to tokenize everything. They are. We'll see how it goes. I don't want a bunch of stable coins. Like, I don't want like PayPal to have its own, you know, dollar, which it does. I don't want like Bank of America, Wells Fargo. I don't want every bank to have their own stable coin, and then we got all this shit stable coins. I want them to use blockchain to improve their businesses, to help store data, make it, you know, immutable, make it transparent, whatever it might be. Obviously, you got to be careful with personal identifiers, stuff like that. But like, I would like to see your Carfax or data about your car, and every time it was serviced or updated, stored on the blockchain. We showed with Savage Mind how that could be done for a Subaru via the Raven blockchain, right? And the asset capability. I still think Raven coin is a great asset. It has lost momentum. A lot of people don't look at it, but the point is that blockchain can be used for a lot of good. I'm hoping that you know, the world starts waking up to that instead of bullshitting. But we'll see how things go. But I don't think there's any Red Panda going on today. So I'm going to wrap up the stream here. We're at 11:54 a.m. Eastern Standard Time. Oh, yeah, Red Panda is going live. Wait, that's at 9 p.m. My 2026 crypto mining plan. That's tomorrow at 9 p.m. All right, cool. Yeah, so might listen to this video. Do you have any questions, comments, concern? VTC is doing well after having. I think the price will drop, but it didn't is. So I think he's talking about Vertcoin. Let's take a look real quick. VTC, yeah, VTC. Let's zoom out. I mean, we're talking about Vertcoin, right, Rug? I hope you had a very Merry Christmas as well. Crypto Mikkel, thank you for stopping by. That's why Trade Ogre, Rudd says that's why Trade Ogre was the best. That did not know who you are, so they can sell your info. So VTC Vertcoin, compared to its olden days, which, I mean, if you look at Zcash or any of these other coins, you know, you basically like omit anything before 2022, and you're pretty much good. So from 2020, let's go from here, 2023 onwards. Yeah, I mean, it's doing all right. Yeah, it's doing all right. 7 cents right now, climbing. Some of the altcoins should gain some steam, right? While Bitcoin is chopping sideways, this is the best time for our altcoins to kind of gain some steam, gain some, you know, upward momentum. Caspa, oh my God, Caspa. Is Caspa dead? Maybe we'll do a separate video on that. You guys let me know what your thoughts are. You know, everything, you can see the charts are all looking pretty much the same because they're following Bitcoin, right? They're basically following Bitcoin to a T. So I think Bitcoin, once it starts to climb up, we're going to see, yeah, this downward trend is crazy. Look at this flash crash right here, guys. Down to $1, came right back up. Oh, I heard there was a flash crash on Binance. Bitcoin fell to 21K. Where was that? I don't know where it is, but yeah, there was a flash crash on Binance. Bitcoin fell to 21K. I'm not sure how many orders were able to be filled at that, but if somebody got their orders in, congrats, bro. Might put in an order on Coinbase just to see if I get lucky. They do time out after a while, though. Don't look at the olden days. Look at what is on now. Yeah, the olden days is well, I don't know, man. For altcoins, some of the olden days were great times. I had fun. Still have some of my lesser altcoins, not Bitcoin, but my lesser altcoins chilling that I'm hanging on to. They're nowhere near the olden days, but still hanging on to it. Still hashing away, still mining. Might be letting go of a jazz miner or two, just because the electric bill, even though I got rid of that, the big stuff, and only turning on during evenings and yada yada yada. There's some ones that are kicking my butt, and still costing more than I would like. So I'm just trying to adjust, reallocate. Still got the small machines going and hashing, but we'll see. But anyways, that's going to do it for today's video. Thank you so much for stopping by. I hope you had a great Christmas or happy holiday, Hanukkah, Kwanzaa. I hope you had a great time with your family, your friends. Ooh, Zcash. Look at Zcash. Sorry, I got distracted. Shiny thing. Zcash deep greens up 17% over 500 bucks. Let's go. Let's go. But yeah, you know, I hope you have a great end or rest of 2025 and you start off 2026 with a bang. Happy New Year. I will see you next year. I will not be live streaming next Saturday, but hang tight. And, you know, keep jamming. And if you see any new content come out, whether it's automotive related or tech related, if you could just swing by and hit the like button for me real quick, that'd be greatly appreciated. Even if you don't watch the whole thing, even though I would love for you to stop by and watch the whole thing. And yeah, just take care of yourselves, take care of one another, be nice to one another. Keep jamming. That's it, man. Like, that's it. All right? Get out of here. Go. Enjoy the holiday. Wasn't planning on live streaming, but whatever. All right. See y'all.